Good news. People are paying billions in debt. Let's have a look. Happy Father's Day, everyone. Florian.heise here, and welcome to another episode of HeiseSays. I've got my stein of coffee, and I promised you all I would bring you some good news to start Father's Day with. Now, I'm pre-recording this the night before. Probably while you're watching this, I'm being showered with gifts and presents from my children, and I'm certain Rachel will bring me, breakfast in bed. Definitely. Or at least cook up something nice. And the good news, well, often I've been advocating for people to have control of their own super. Just as one argument. People should be able to use their own money how they wish. People should be able to save it how they wish. Nothing is more frustrating struggling to save for a deposit for a home, or digging yourself out of debt when you have a huge pile of money sitting there. And often people will say, Florian, people are so stupid. They need to be controlled. They need to be managed. They'll just spend it on boob jobs, as some people spent their early withdrawal on, or gamble it away. And we'll see article after article putting that forward, pushing that narrative. Now, it doesn't quite say that those articles were paid for by the superannuation industry, but you never know. You never know. So, this piece from news.com is very, very encouraging, and it's really one of my favorite topics. What is it, you might ask? Well, ANZ and CBA customers are wiping billions off their debt during the pandemic. People are getting ahead. People are paying down debt. We saw the savings rate is higher than it's ever been. And what are they doing? People aren't splurging. They aren't wasting their money. They're digging themselves out of a hole. That's the good news. That's what's encouraging. This could add to the argument that people should have more control over their own funds. And perhaps all those fund managers, those union or bank-controlled super funds, might have to actually provide something of value to encourage us to deposit our money with them. So let's have a look at this piece. And happy Father's Day to everyone too. Make sure you get spoiled today. So two of Australia's major banks say customers are wiping billions from their credit card debts as the coronavirus-induced recession fuels an environment of heightened financial cautions. So they're not just paying down debt, they are paying down credit card debts, the worst kind that you can have. I'm quite a fan of Dave Ramsey. He's a Southern American radio show host, and he just hates debt, and he helps people dig themselves out of financial holes. And often you hear the story again and again where people will lose their jobs. They'll lose their jobs, and what they'll do is they'll just start spending and using the credit card to keep their lifestyle going, and they'll dig themselves even into a worse hole. Hopefully, people are aware enough here in Australia to not fall into that trap. And this is encouraging. It's quite encouraging to see that people are tackling this debt. But if you want some good, Southern American financial advice, look up Ramsey. I quite enjoy his YouTube stuff. Even his rant series are good too. So, in a House of Representatives economic hearing on Friday, both ANZ and Commonwealth Bank said customers had been paying down high-interest accruing debt at faster rates to minimize financial pressures during the downturn. CBA Chief Executive Matt Comyn said there had been a 17% drop in unsecured personal loan debt, with the country's largest retail bank recording a $2 billion drop in outstanding credit card debt. ANZ Chief Executive Shane Elliott also said its customers had wiped $2 billion from the bank's credit card loan book, saying people have become more prudent during the pandemic. Australia's Big Four banks will front the committee chaired by Liberal MP Tim Wilson, over the next week to explain how the economic downturn had impacted the sector. Oh, the poor banks, they're going to lose out on all that interest, guys. The poor banks, man, I'm sure the government will throw them some. I'm half joking, because I'm worried that that the government's going to have like a bank keeper package and start paying money to people. Spend on your credit card to help the bank. I'm only half being facetious. You can already see the advertisements now from the Australian government. Since March, institutions have implemented six-month mortgage and loan deferrals for customers experiencing financial hardship due to the pandemic. Loan deferrals are set to expire at the end of September, while some of them have been extended until March. We'll have to see. We'll have to see how many people actually take advantage of it or just jump back in and paying. Since the start of the pandemic, CBA has received about 1 million requests from customers for financial assistance and support. We've offered deferrals on 250,000 loans relating to over 60 billion in loan balances, he said. At the peak, this included deferrals of 154,000 home loans, 86,000 small and medium business loans, and 21,000 personal loans. Mr. Elliott said about 84,000 of its home loan customers still had their mortgage repayments on pause. The deferrals represent nearly 10% of the bank's home lending portfolio. It is, of course, unsurprising that demand for credit has dropped as businesses wait to see what the future brings, Mr. Elliott said in his opening statement. Remember when the RBA, one of their strategies, was to increase the amount of money they were providing for the banks to lend to businesses? And I guess there would be some people in a situation now where business is good enough, where they've got work coming in. Maybe they're in bed with the government or they've just won a big contract. So it's smart to take advantage of the money to borrow and invest. Spend some capex, particularly if you can write it off instantaneously. But it still scares the hell out of me in this current climate. I can't see a lot of people jumping at it. What would terrify me would be people would be borrowing money to, instead of capital expenditure tied to income that's coming in, to try and keep the business together that's falling apart or may never return. That's the scary thing. ANZ's credit card book has fallen from 7.5 billion to 5.5 billion from the drop in credit card use. Mr. Elliott noted the plummet in spending had impacted the bank's revenue. However, other lending categories such as home and business loans had increased. So homes are going up, business loans are going up, but their bank credit card revenue is going down. What do you think, guys? Have you, if you have a credit card, have you really managed to destroy it in this pandemic? Are you one of those horrible people? Those horrible people that are hurting the bank's revenue. Do you sleep at night knowing that you're taking money out of Shane Elliott's hands? Shane Elliott, the CEO from ANZ. I actually did a video a long time ago, probably 2 years ago, looking at just the CEOs, and ANZ, Mr. Elliott was one of them, where they're all talking about these strategies they want to implement. All discriminatory strategies, particularly preferencing, women in positions of employment or senior management, and just the arrogance coming from him. But that's the corporate world now. It's the corporate world. I remember Scott Adams was saying in one of his books, he hit a ceiling where they're saying, sorry, we can't promote you anymore, we're promoting other people. So he left. ANZ said about 15% of customers who had frozen their home loans were still uncertain when they would be able to meet repayment commitments beyond the end of the grace period. The bank said a number of new loans had been from homeowners refinancing to take advantage of cheaper interest rates. Now, have you managed to pull that off, guys? Let us know in the comments. We had one viewer who managed to play one bank off the other and got a upfront payment and managed to get a really good deal. Have you managed to achieve the same? Have you refinanced and taken advantage of these insanely low rates? Mr. Elliott said, the broader economic impact on the banking sector remained uncertain. However, he expected the housing market to fall by 10 to 15%. Well, we're seeing that more and more now. It's only the spruikers really who are trying to justify the housing market increasing. CBA is also anticipating the property market to drop by 10 to 12%, while unemployment will peak in the December quarter at 9 to 10. I somehow think they may be a bit optimistic here. I really would. If all we got away from this, honestly, if all I had to cop was a 15% price deduction to the house, I wouldn't even notice it. It wouldn't matter. If we got away with that in a recession like this, I haven't even programmed the GDP calc into my streaming platform, But I'll jump over here. We'll go to the calendar for Australia. And we'll have a look. We just got GDP figures. Oh no, we'll go indicators. This is trading economics, everyone. Lots of economic data for any country in the world. It's fantastic. But we'll just bring up this here because I want to show this on the max data. Look at that fall. See all these little up and downs? Some of those were the last recessions. You know that recession Australia had to have? Doesn't even look anything that scary now compared to what we've just encountered. So, if this here only results in a 15% hit to housing when so much of our civilization is invested in housing, I will be really happy. I'll be really happy. It means that the economy will spring back. Maybe this is the V-shaped recovery they're all talking about. It'll shoot right back up. I suspect not, though. Both CBA and ANZ said stage 4 lockdowns in Victoria had not caused the significant spike in loan deferrals. The size of the economic contraction is less severe than we first anticipated, but we face a long and uneven recovery, Mr. Cummins said. He did note investment property loan holders may need to consider selling assets in order to reduce outstanding debts or loans. And we're starting to see that. That started to manifest in Sydney, where property is being offered 15% cuts. A viewer just sent me a email of a property going to auction, or going to sale or auction, 80 grand less than what it was advertised for just recently, or what actually sold for 2 years ago. I'll do a video on that later today. Well, as always, thank you for watching. What do you think? Do you think this is good news? Are you glad that the banks, or do you feel sorry for the banks that they're not going to make that revenue? Are you a shareholder in the bank and are disappointed that you won't be getting that sweet, sweet credit card interest? Or are you someone that's finally managed to take a big slice of your debt or paid something off and are really happy, and this is a never again moment for you? You're cutting the plastic and casting it aside. Well, there you have it, everyone. The good news I thought we'd all start Father's Day with. Cheers to all the fathers out there and all the children of fathers. Make sure you spoil them. That is a legal requirement. Spoil your dad's rotten. Take care, everyone. And, well, there may be a bit of bias, and that's me saying that. Hey, take care, everyone. Please like, share, and subscribe to the channel. If you're a fan and want to support the content I create here, there are a few ways you can. You can join the channel on YouTube or Patreon. You can support us using our affiliate links at Amazon, eBay, Independent Reserve, or Kucoin. You can buy a merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care. I'll see you next time.